This month's been crazy. I'm down about $10,000 of my 100K portfolio, and the whole market feels like it's on panic mode right now. But instead of freaking out, I'm gonna be using this as an opportunity to get my 100K portfolio to 1 million. So let me walk you through exactly what I'm gonna be doing during this whole market crash and what I'm thinking about this whole situation. But first, I'm not a financial advisor. This video is for tracking my investment portfolio progress, informational and entertainment purposes only, not financial advice. So here's where my portfolio stands right now. My core position, IYW, is down about 8%. IBLC down by more than 30%. 7,500 sitting in SGOV, which I'm trading as a dry powder and gives me 4% of interest every month. So that's very good. So this is what I did this month. I sold $5,000 worth of SGOV and reallocated that cash to buy more IBLC at a discount. By doing so, it lowered my cost average to $52.68. I'm still down by 17%, and that's okay. I'm just gonna keep buying more IBLC, and one day I'm gonna be making this as one of my core position other than IYW, because I have a long-term vision and high conviction in the blockchain industry overall. I explained how the overall IBLC works in my other videos, so please go check it out. And especially with the Bitcoin dropping aggressively, and overall sentiment on the crypto industry is going negative, so that's good. I think now is the right time to load up more shares of IBLC, and that's exactly what I did. It could go down much further than what it is right now, but the current price is the price that where I like it, and I might even load up more depending on the market move going forward. But my main core position is still in IYW. If IYW drops anywhere more than 20 to, I don't know, maybe 30% from my cost average, that's when I will be buying more shares of IYW, maybe $1,000 to $2,000 every month. I already have substantial amount in it anyway, so I don't think I'll be going lump sum amount in IYW. I'm just gonna keep watching and then wait for better entry point. And once the market starts to bounce back, I'm probably gonna be going back to rebuilding the SGOV position to use it as a more dry powder when the market goes down even more later. Who knows? So as you guys can see, I bought both IYW and IBLC at the top. Like literally at the top, right? And honestly, it could have been nice mentally to wait and buy at a price like today. But you know, here's the thing, right? Nobody ever knows when the market is gonna go down or go up next day, you know? Today is always the best time to buy. At my entry point, it was at the time before the Fed decided to finally start cutting rates. Everything seemed hopeful and great. So what I was thinking at the time was like, so instead of waiting on the sideline hoping for like minor correction or waiting on the sideline simply gambling on timing, I chose to stay invested based on historical performance of these ETFs. You know, everyone wishes they could go back and buy at the bottom, but like that's easier said than done, right? Especially during times like this, you know, if I were to go look back, you know, I really wish I could have bought it a lot cheaper, but you know, live and learn. But the fundamental truth is this: my goal horizon is 10 years. So whether IYW or IBLC drops 20 to 30% or even 50%, I don't know, it's irrelevant to me. Matter of fact, a correction like this is actually an opportunity to load up more shares. I mean, I'm not gonna lie, it kind of hurts to see the negative numbers. And I mean, I'm only smiling because I've been through a lot worse than this, to be honest. But it's only a paper loss. Unless I hit the sell button, literally sell button, it's not really a loss, right? So to speak. So we got all kinds of fear in the market right now, like AI bubble, recent government shutdown delaying the employment data, the Fed possibly not cutting interest rate in December. Oh my goodness. And this is causing the liquidity concern, this and that, whatever, and people freaking out about potential market crash next year. And there's a lot of noise right now. And that's exactly what it is, noise. Because the fundamental of these ETFs haven't changed at all. IYW still holds the top US tech giants. IBLC still holds the strongest blockchain players. Nothing about these ETFs has changed. Only the market emotion has changed. So even though I bought at the top, I'm not stressed. I'm buying more share at a discount because I don't need this money right now. My goal is to get to 1 million in 10 years. And I'm planning on holding these assets for the long term. I mean, if I really need the money, right? There's many different ways of pulling the money out from the asset without ever selling it. And I'll explain this in a future video if I were to come to this situation. But regardless, this is how I think about the situation. So let's imagine you own a car wash business, right? And this month, the revenue has went down a little bit because it's been raining all month. Are you gonna go out and list your business for sale? Like, seriously? No, right? That's crazy. So the fundamentals of your business hasn't changed, just the weather. And I see this situation as same thing. We don't know what the Fed's gonna do next month. They might lower the rates or they might not, who knows? But one thing is guaranteed, they eventually always cut rates. It's just a matter of time. So when they cut rates, the liquidity goes up, and when the liquidity goes up, the stock prices usually go up. And if they tighten the rate, the liquidity shrinks. So all the investors out there start freaking out, selling all of their stocks, whatever. So the stock prices go down. And maybe this could actually cause the market to crash next year. But who knows, right? But all the things that I said about Fed lowering the interest rate or whatever, this is outside of our control. But if you were to zoom out a little bit and look at the historical performance of, let's say, S&P 500 or NASDAQ, the market always recovered, always. And ETFs like IYW and IBLC tends to rebound much faster and go up much higher than BOO or QQQ because it's simply tied to high growth sectors. So instead of worrying about what ifs, focus on what you can control. And that's what I'm doing. Buy more at a discount and stay invested for the long run. And this is my plan and my mindset. Nothing fancy, simple as that. And this is how I'm gonna approach throughout this uncertainty times, and that's it. Well, thank you for watching this video. I'll see you in my next video.